Sir, can you please nuance why the March loans are going even lower than the
Mhm.
month of February, especially since there was a low base year naman in
Mhm.
2020. There were lockdowns, and you would expect that with the lowest possible interest rate, we're at a
Mm.
record low. By now,
Yeah.
the effects would actually be felt.
Yeah, well, maybe the effects. Well, you're right. No, the effects should have been felt already, but uh, those cuts that we experienced, no, and the nudges towards having growth or the loans turn around might be taking some time at the moment because, like I said, because of the dynamics of the pandemic. Confidence is one very big factor in terms of turning that around. No? So that's the bigger challenge, actually. If business confidence and consumer confidence as well improves, we can be sure that loan growth will go with it as well. No? So the usual monetary solution that we do might actually be taking its sweet time, no, so to speak, in terms of nudging the recovery towards loan growth.
Let's talk about the second quarter and what
All right.
can or cannot happen, especially as we're all waiting what's going to happen on May
Mhm.
15th. What is going to be the impact on the second quarter GDP estimates that you have if we do shift to GCQ and on the passage of Bayanihan 3?
Well, should the new ECQ last for most of the second quarter, no? Meaning if that doesn't get lifted by May 15, our estimates show that the second quarter growth will be slower than than originally anticipated. So, and that weakness could also spill over to the third quarter. And that will effectively shave off 1 percentage point from any baseline. For now, no, our baseline is 7% growth for year on year, but really it could actually be at 6%. No? But that's dependent again on how fast we can recover from the ECQ and how large or how deep the effect of the ECQ was to growth as well. And also, you mentioned Bayanihan 3. Any fiscal stimulus will be very good to the economy as well. No, it's something that's needed at the moment to actually complement the existing monetary policy response. So that will be a welcome development as well.